Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the mysteries of the business world. And today we're digging into News Corporation's latest filings, where it seems they're telling the market buy, but in a very official way. So what's the big deal here? Well, News Corporation, the media giant we all know for its newspapers, websites, and TV channels, is basically telling us about its stock buyback plans. Think of it like the company saying, we believe our own stock is a good investment, so we're going to spend $1 billion buying our own shares. This isn't some secret deal. They're obligated to tell us what's happening with their stock buybacks, especially to places like the Australian Securities Exchange. They're authorized to buy back quite a bit of their stock, up to $1 billion worth, and this report talks about how they share this information with the ASX, the Australian stock market. It's a way to keep investors informed about the company's financial health and future plans. They're essentially giving daily updates on their stock repurchase programs. What they've attached to this report are copies of the disclosures they made to the Australian Stock Exchange. These are the actual documents where they're detailing these buyback activities. It's like showing their homework to prove they're doing what they said they would and doing it transparently. The paperwork itself basically confirms their identity as News Corporation, incorporated in Delaware with their specific file number and tax identification number. It's all the standard stuff you'd expect before getting into the meat of the report. They list their common stock classes and where they're traded, like the NASDAQ. The crucial part here is the item 801, which is all about other events. This is where they explain that for a while now they've had these stock repurchase programs, and they are allowed to buy back up to $1 billion of their Class A and Class B common stock. This report is just a continuation of that story, showing they're keeping up with their commitments to disclose these transactions. Now, they also include a big disclaimer about forward-looking statements. This is super important. What they're saying is that when they talk about their plans to buy back stock, they're making educated guesses about the future. These statements are based on what their management thinks now, but things can change. Prices can go up or down, the market can shift, laws can change, or they might find better places to invest that $1 billion. So while they're telling you their intention to buy back stock, it's not a guarantee they'll intention to buy back stock. It's not a guarantee they'll buy every single share or at a specific price. They also make it clear they're not promising to update these statements if things change later, unless the law says they have to. It's a way for them to manage expectations and legally protect themselves from future claims if things don't go exactly as planned. Then we get to item 9.01, which lists the exhibits again, basically pointing to those disclosure documents for the Australian Stock Exchange as Exhibit 99.1 and 99.2. They also mention Exhibit 104, which is the interactive data file for the form itself, making it easier for computer systems to read all the information. Finally, we see the signature section. This is where someone authorized by the company, like Michael L. Bunda, who holds a pretty important title as Senior Vice President, Deputy General Counsel and Corporate Secretary, signs off on the report. This signature confirms that the company is officially submitting this information. Now for my take. News Corporation is a massive, diversified company, and these stock buybacks are a pretty standard way for mature companies to return value to shareholders. When a company buys its own stock, it can signal confidence from management in the company's future prospects. It can also increase earnings per share because there are fewer shares outstanding, making each share represent a larger piece of the company's profits. They mention $1 billion buyback authorization, which is a significant amount. While this filing doesn't give us updated financial tables with earnings or revenue figures, those are usually in their quarterly 10Q or annual 10K reports. It tells us they are actively managing their shareholder returns through buybacks. The real story here is their commitment to transparency, especially with international exchanges like the ASX. They are complying with rules that require them to disclose these repurchase activities. This adherence to regulations builds trust with investors. The forward-looking statements part is standard legal practice. It's important for investors to understand that these are plans and not concrete promises. Etched in stone, they need to look at the broader financial picture in other reports to see if the company's performance actually supports these buyback strategies. The key takeaway is that News Corp is actively signaling its confidence and managing its share count, all while keeping its global investors in the loop. What's your take on these stock buyback programs? Do you think they're a good sign of a company's health or just a way to boost stock prices? Let me know your thoughts in the comments below. If you found this breakdown useful, give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching. See you next time.